Hello everybody, and thank you very much for joining me today. It is turbulent times in the world of Bitcoin. Taking a look here just to see where we are standing currently. The price is sitting just above $50,000 at $50,029. So we've seen a huge pullback. I mean, is it 80% huge? No, but we've had definitely a solid correction here. So what do you do at this point? I mean, we got up to 65,000 roughly. We were just underneath that, and now we're back down to 50,000. There are people calling for 20,000, 30,000, whatever the case may be. And I could certainly see how that could cause some concern for a lot of people. So I'm here to straighten it out. This video is not going to be talking about what do you do in terms of a trader's point of view. What do you do over the next day, week, month? No. What the whole point of this video is to actually give you insight into, how you want to look at this over a longer term period. There are things in here that I have that I'm not going to be able to cover everything today. Like, for example, on a 4-year rolling basis, Bitcoin is always 10x'd. So, what that means is at every single point in time in Bitcoin's existence, you have to wait you can't do it the first 4 years because you have to be able to look back 4 years. But when you look back 4 years, it has at a minimum been up 10 times. So its value is 10 times higher than where it was 4 years ago. And it has carried that on for almost a decade now. And it has even gone to the point where it has been up 40 and 50 times looking back. As we move forward, I expect this to decline. Yet, that's in the future. When exactly, I don't know, but I could tell you that's not today. It's in the future when the decline will happen. And it's going to be impressive with what I'm about to show you. This is going to be very impressive. But where we start off this video is with this. So, this is, thank you very much, Gold Silver, Mike Maloney. I took this from one of his videos. I don't expect this video to become huge. If it does, so be it. It's not trying to steal this, but it's fantastic, beautifully done. Mike Maloney, Gold Silver, wonderful videos that he puts out. Very, very, very enjoyable to watch, entertaining, informative. Now, enough of plugging him, so he maybe cuts me some mercy for taking this. But at the end of the day, this is fantastic to show you, the difference between currency and money. Currency is a medium of exchange, a unit of account, portable, durable, divisible, and fungible. Money is the exact same thing in addition to being a store of value. Now you see gold and coin there, and yes, he is referring to gold versus the dollar and fiat currency, versus hard money gold. Now, what is Bitcoin? Well, Bitcoin is the child of gold. Bitcoin and gold are a tandem team. It's kind of like Rocky having a son, and then him going on to be as great of a boxer as Rocky was. Essentially, gold is the undefeated, world monetary system champion. That is what gold is. And then, as time goes on, things change, and, gold gets a little bit older, not what it once used to be, but still, can take on, quite a few things, but it's a different time. You got to modernize. And in that, we have Bitcoin. Bitcoin takes care of a lot of the issues and problems people would otherwise have with gold, in terms of the ease of transferring, the ease of storing, the ease of, dividing it up and, and being divisible, and whatnot. and how portable, even though gold can be portable to a certain extent and degree, Bitcoin is obviously, since it's digital, it's an improvement upon that. So it's an improvement upon all of these things, and it maintains the store of value. And what maintains it is the blockchain network and the miners. Now, people say, there's issues with the miners and so on and so forth. Okay, we'll get to that in a moment, but what you need to understand is that what ensures and provides the integrity of the network, making sure there's only 21 million Bitcoin to ever exist, unless the developers make a change. Extremely unlikely to happen. I could see, all life on Earth ceasing to exist before that change ever gets made. So I think we're going to be at 21 million for a long time, certainly the foreseeable future. Now, let's get back to the point of the miners. Now, I'm going to take a jump to somewhere else first, but there are risks out there, and I'm just going to tackle the risks of Bitcoin first, one of them being crime. So as you can see here, and when I saw the title of this, when looking up articles, I could tell this guy was not going to be south of 40 or 30 or whatever the case may be, but he is certainly getting up there. I don't know how old this individual is, David Black, but not trying to be too critical or making fun of him for his age. At the end of the day, though, he's certainly not a Bitcoin believer. And what you need to realize, though, is when you go through his article, first of all, excuse me, he points out some things that I think need to be further explained. And, you'd like to learn more about regarding the, illicit use of Bitcoin and whatnot. But there's illicit use of a number of, currencies. Currencies and other things are, used in illicit activities a number of times. So it just becomes challenging for me to really, how can I put this? Get on board with not believing in Bitcoin for what he's saying. I think what he points out, may in fact be true, and there's things that you want to have explained. Yet, here's the issue. People, and this is more generally speaking, will say Bitcoin is used for crime and it's a crime haven and whatnot, so we're going to shut it down. And it's like, well, cars are used for crime, and we don't attack the car because it's not the car that's the problem. There's something else that's a problem, and we could just go on forever with examples like that. Currency is used and dollars are used in many wrong ways. And, essentially, though we don't get rid of the dollar because the dollar is not the problem. And the one advantage Bitcoin has over the dollar fundamentally right now is the fact that every transaction is recorded. And with dollars, that's not the case. So when it comes to ragging on Bitcoin because of crime, okay, yeah, to a certain extent, it may be worse today in a number of ways. It's just self-defeating, and it's very, very negative and pessimistic. And I'm sorry that some people are that way, and they're not more optimistic. But from the point of view of, well, you look at a problem and you think, well, is there a solution to this? And there is. There are solutions to the things that he points out. And every single one of them could be solved actually relatively easy, relatively quickly, and then this no longer becomes an issue anymore. But to write an article which pretty much just exclusively puts down Bitcoin, it's just, He's accusing people of, hiring an ex-CIA official for propaganda, yet he's not actually looking at this in a way that is objective. And he is coming at it at a way that is subjective and from one angle. And that's the thing you got to be on the lookout for, is a lot of people will come at Bitcoin from, this certain angle where they're just pretty much trying to take it down, and that's it. So, they're not looking at it objectively. And for that reason, yes, I don't even know. I don't care to look it up or know. It does not matter the extent and the percentage to which Bitcoin is used for illicit activity and crime. The only reason and the only way that matters is if the people who use it refuse to, do things to help prevent and fight crimes. And as you can see there in the picture below, ironically speaking, is Coinbase. Coinbase being the biggest, if not one of the biggest, exchanges in the world. It depends on how you look at it. Binance is, from my understanding, the biggest, but Bitcoin certainly trades a lot of volume and is a big influence on the cryptocurrency industry. Even if you're going to start to dispute me on trading volumes and other things, they have a lot of clout, especially in one of the biggest economies, or the biggest economy in the world, the United States, in which case their opinions and influence matter a lot to adoption and to their business. Now, they can influence the industry. With that being said, you have to, if you're going to believe this guy in poo-pooing Bitcoin to the extent in which, he does, that Coinbase is just going to refuse to comply and work with people and come up with regulations that make sense to fight crime and the illicit use of Bitcoin. And that is just something I completely do not believe. I am certain for a fact will not be the case. And essentially, what this guy, when you read his article, makes Bitcoin out to be is like rat poison, where, it's just bad. And when people talk about Bitcoin and being used for criminal activity, they just, pretty much make it out to be like there are very, very few reasons why people would have Bitcoin. It's mainly because, it's bad. And, for that reason, there's no other use cases for it. So, it's just like that. It's just bad. And it's like, well, that's not Bitcoin at all. Bitcoin is much, much more than that. So when it comes to a risk and people are worried that the currency will get banned or taken down or all these other things will happen and it's too associated with crime, no, nobody's worried about that. And it's actually dishonest and hurtful to the adoption of something that can actually be really, really good for society, as I will go on to explain. So with that being said, no, I'm not, the risk from people accusing Bitcoin and its association and connection to crime is overstated, overdone, and it is not a risk. The next is Bitcoin is dirty. And essentially, that's what Citibank thinks. Bitcoin is a dirty, dirty asset, and they don't think it serves much of a purpose. Bank of America doesn't think it serves much of a purpose. Wow, shocking. The two biggest banks in the United States who really their businesses depend upon the dollar's supremacy criticize Bitcoin. Now, one of them is just saying there's no purpose for it and not actually going out there and saying anything else. I mean, they'll parrot a bunch of other things, but they haven't come up with anything that really makes sense in terms of trying to take down, the currency and have a criticism for it. And anything they do put out there has a solution. And the fantastic thing here is ARK Investment and Square. They have come up with a group that puts out research and is looking to work together to support the development of Bitcoin, which is optimistic and positive and good. And it's good for many reasons. And essentially what they said, and this is the example that I'm going to use, these numbers, once again, will not be terribly spot on, but you have to look at it this way. Clearly, California needs more than 125 watts of electricity during the summer. With that being said, I'm going to use that as a numerical value to, in this example, and it's really just me explaining relative needs at different periods of time. So in the summer, they need 125 watts of electricity, California, and in the winter, they may only need 75. So they're going to need 50 watts less. In the winter, they're going to need less. Now, in the winter, there could be power generation and it could be stored in batteries, and then that gets you through the summer. However, lithium is extremely expensive, not to mention the fact when you're building a system, there are going to be a couple factors that you take into consideration. One is, the storage ability. Okay, let's think about that, but let's think about storage ability compared to cost, and what do we need storage for, and how are we going to use it? And it is certainly going to be, in my opinion, cheaper to build out more solar panels than it will be, to build out massive, freaking warehouses of batteries. Now, you will need batteries, but solar panels will be more important. Batteries will most likely just be used to get you through night and times when there is no sun, and it will most likely be more affordable for during needed times of use and all the other times for you to use solar panels. However, like I said, in the winter, there's going to be a lesser need in California, as an example, for electricity, and you're going to have solar panels in excess doing, excess. Essentially, for the night, the storage will get filled, at some point during the day, and then from that point in the day until sunset, when the sun goes down, there will be additional electricity produced. But you already took care of the grid, you already took care of the, storage that's needed to get you through the night, and it's not as though a gas car, and I know, gas-generated electricity for homes, you don't just turn it off like a system and turn it back on. There's no just one little tiny key and somebody goes to it at one of these plants and just turns it, and then all of a sudden everything starts going. There's more to it than that, but essentially, in theory, you could just turn off, a coal factory, oil factory that generate, electricity, and then they could just sit there, and then you could go back later on and turn it back on. There's more to it than that, I know, but you just get the point. With the solar panel, you can't. Whether you like it or not, it's generating electricity, whether it's needed or not. And since they're not going to build to, perfection, because demand and use and all of these things change over time, there's always going to be a cushion of excess built. Yet, since you can't turn it off, creating efficiency is going to be difficult, and the reason for that is going to be due to the fact that you're always going to need a cushion, and so on and so forth. There's always going to be this production. So what do you do with it? Well, ARK and Square proposed that you use that wasted electricity to power Bitcoin miners, hence creating revenue for this electricity, making the system more efficient. So you're not wasting electricity. This electricity that would otherwise have been wasted is going to something that is creating income. And when you reduce waste, you actually reduce cost. And by reducing cost, Bitcoin miners and their utilization with solar panel and green energy systems actually can, since it's lowering the cost, speed up adoption. And then there are many other things that you could go off of, but at the core, that is what they're saying. So anybody that says Bitcoin is dirty, well, 40% of it already uses clean energy. 40% of the Bitcoin miners are powered via clean, sustainable sources of energy. But the rest of them certainly can go that way, and there's nothing that, is really stopping this other than just deciding to, move forward with that solution. So, with that being said, this is not a risk. And you can actually see that by Citibank talking out of the two sides of their face, because there are actually people at Citibank believe that Bitcoin could get to 300,000 before the end of 2021. So honestly, take a lot of the FUD and negatives and risks that are proposed about Bitcoin, not entirely with a grain of salt, but a little grain of salt. The biggest risk to Bitcoin are people not knowing what they're doing. And not just that, I don't think all of these people were idiots, but Turkey crypto pain grows with second exchange collapse. Yeah, a guy in Turkey opened up an exchange, cryptocurrency exchange. People left their money on the exchange, and then all of a sudden, overnight, the guy just shut it down and took all of their, cryptocurrency and then booked it and left the country. So, look, is there much that a lot of these people could have done about it? No. Is this extremely bad? Yes. Is this a problem? Yes. Is this why we're having a sell-off? Most likely the reason why we're having a sell-off. It started with, a coal mine explosion in China that ended up shutting off power to a lot of Bitcoin miners, in which case these miners ended up going offline, and that impacted the network. And anything that impacts, like I said, what ends up creating that store of value and ensuring that, you're going to end up seeing people get concerned, but the network is very resilient. It never collapsed, never even came close to that, and everybody's back online and good. So at the end of the day, it was tested and everything worked as intended and nothing bad happened. So once again, we're taking care of these concerns people have, but the solution to that problem, which is the biggest risk, which is either your Bitcoin or cryptocurrencies get stolen or lost, is Coinbase. CZ, the creator of Binance Coin, has said that honestly there are people who will be able to hold their own cryptocurrencies, and as technology and then knowledge develop, people will become better at doing that. And holding them in cold storage wallets, but for the majority of people, they're going to hold them on exchanges, and they're going to be custodianed because of a bunch of different limiting factors. So given that, what's practical, for the future going on, the people who, and I have catchphrases, I'm sorry, people, just deal with it, I don't care. But the people who really were the first adopters of Bitcoin are hardcore, decentralization, hardcore, holding it yourself and all these other things. And it's like, look, you go to Stop and Shop, you go to your local grocery store, just take a minute, look around, and, see if you can find 10 people you think they'll be able to do it themselves without technology developing further or, something else. No, like you go for mass adoption, you need Coinbase, you need Venmo, but the solutions are out there. The solutions are out there to this biggest problem already. It's very, very damaging. I can see a lot of people seeing this happen, and because Bitcoin is global, there are a lot of people out there. There are a lot of literally shady exchanges. And my tip of advice to people is, look, Coinbase is a credible exchange in the United States. I use it. And essentially, I look at the coins on there, and there are coins I could buy. There are other coins I want. And it takes me a long time and process to be comfortable enough going outside of this ecosystem to then get another coin. Because honestly, even if I think it's going to go incredibly higher, okay, there are plenty of good returns to be had via Coinbase and what they're offering. There's plenty. Yes, can you go outside of it? Yeah, you can. Just understand, the risks and do your own due diligence incredibly and massively, and don't, look, do the due diligence, do the research into, the exchanges, and then do it again and do it 3 times and just triple and quadruple check before you go out there and you start, messing around on things that are just not as prominent as Coinbase. So yeah, no, I could see this having an impact, and it did have an impact on the cryptocurrency market and Bitcoin, and it's the biggest risk. Coins getting stolen and, coins getting lost. So, that is the biggest problem, And we have the solutions, but there's obviously going to be a lot of criticism, and it's going to come with regulation whether people like it or not. A lot of the hardcore Bitcoiners, original adopters, don't like regulations, don't like all these other things, don't like them, so on and so forth. But it's a double-edged sword. If you want more adoption, you're going to have to take the swallow that pill, as hard as I know it might be. So even that one, which is a legitimate risk, this is a legitimate risk everybody should be aware of when going out there. We have the solution. It's Coinbase, Venmo, things along those lines. So with the risks out of the way, let's just take a deep dive into looking at on-chain analysis and different things to see what are the long-term prospects for Bitcoin. Well, first, the balance of Bitcoin on exchanges has been falling, and now for more than a year in decline, as you can see in the right part of your screen there. And back as you look in the middle part, the orange line, which is the number of Bitcoin on exchanges, we saw in 2016, about June to the end of 2017, throughout the end of the year, a decline. And now that was really early on in the first run-up for Bitcoin. In which case, that first bull market, or not first bull market, but for that bull market in 2017. And we haven't even stopped yet. So to say that, this is the top, I really don't think so. Moving forward, here's the other thing. Now, you look to the left side of your screen, you see, July and then January 2017, you see the, 2016 to 2017, and now this is Bitcoin miner net position. So when it's green, Bitcoin miners are accumulating Bitcoin, and when it's red, they're selling Bitcoin. Now, the interesting thing is the fact that pretty much for most of the 2017 rally, they were sellers. Now, imagine if they were accumulating, how incredibly large that rally would have been if there was less Bitcoin supply being sold into the market. And now look at us recently. On the right half of that screen, you see more green. And this and this do not directly correlate to the price of Bitcoin, but what I can tell you is there is a relationship, and when people look, there is a relationship. Now, I'm going to talk a little bit later on about the relationship between printing money and inflation, and then there's a relationship here between taking Bitcoin supply off the market and the price. And essentially, there's a lot of Bitcoin being taken off the market. However, the reason why you're seeing this orange line go down, and then we saw the black line go up. Now on this taking a huge bird's eye view kind of look at it, it doesn't seem like a big deal, but then you also have to wonder why, it's still continued, but the price of Bitcoin has slowed down and how fast it's going up. And the reason why is because as the price rose, we're getting fewer and fewer buyers of Bitcoin coming into the market. And that's the problem with the price of Bitcoin right now. As you can see here, though, another thing about on-chain analysis, the orange or purple, or not orange, gosh, the purple line there, pink, or whatever you want to call it, is the price of Bitcoin on a log scale. And then you see the green line, which is outflows and, inflows to cryptocurrency exchanges, the number of transactions depositing into cryptocurrency exchanges, and then the blue line is the number of transactions coming out of cryptocurrency exchanges. And obviously, as that line expands, you end up, seeing a peak occur, and you end up seeing a sell-off. And as they, go further away from each other, you see sell-offs. But as you see them coming close together, the last time we saw this was, in 2015 to 16, that ended up being at the bottom, that these two came close together. And then, essentially, from the beginning of them touching to the end of them starting to come apart, you did see the price double. The price of Bitcoin, it was a little bit more than double, but it doubled. I'm just going to say it doubled. I don't know exactly, but it was a little bit more than that. As you see to the right, and we're going to zoom in here for you, you see the blue line here now. I should have figured this out, but whatever. I'm not redoing this. It's already taking me long enough. The blue line is the price of Bitcoin. The purple line is now deposits, and the green line is money, is withdrawals. And it's the number of transactions. It's not the aggregate amount of, Bitcoin either going in or out. It's the number of transactions. Still important, but you see those two converging. Even with, as you see, the blue line, the very, very teeny tiny, but Bitcoin price dropping, you're seeing, people taking money out and people putting money in. It's converging, and those two are going to meet. Remember what happened the last time? We'll just go back to it quickly. Those two met and the price doubled. Now it took, a little while. It took some, time for that to happen, about half a year, but the price did double, and that was the beginning of an even longer bull market. So once again, we have bullish on-chain events occurring. We look at stock to flow. And as you see, over time there was a larger departure, but as time is going on, what we're seeing is stock to flow pretty much, produce a very accurate representation of the trend for Bitcoin. And obviously, you could see that this means, there's a good chance of us going to 100,000 and then further and further and more and above and beyond. There was actually an updated version of this, in which case, it's higher than 100,000. I don't remember off the top of my head, but essentially I think it's 500,000 ultimately we could get to. So yes, you need to, well, the reason why it's 500,000 is because of an overshoot. As you see, Bitcoin tends to overshoot during bull markets, and it's believed it could overshoot to 500,000. Either way, it's putting it on pace to get to 100,000, and gravitate around there eventually. So stock to flow, looking at the price of Bitcoin and its pattern over time, is, bullish. So then what gives? Well, like I said before, you just have people not putting money into Bitcoin. We look at this, and a lot of currency has been created. We look at this, the Shiller price to earnings ratio. And as you can see in the right, it's shot up, the price to earnings ratio, because a lot of currency has been created. And the money has flowed into the stock market, pumping that thing a lot higher. However, now this could be as high as 130 trillion, but in looking at it, the amount of wealth in all of the stock markets globally combined is 95 trillion. The amount of wealth in all of the bond markets and whatnot in the bond market globally is 128 trillion. The amount of currency that you end up seeing on this page is 120 trillion, and the market cap of Bitcoin is 924 last time I checked, which was a little bit earlier today, billion. So you see this in the top right, but I'll read it for you because it's probably too tiny. Bitcoin makes up less than 1% of the currency market in terms of its market cap compared to the total market cap dollar value of all currency in the world. It's 0.78%. And this is going to be important for something I show you in a moment. But to talk about the bigger picture, the reason why is there's wealth being created, there's wealth, occurring. There's a lot of wealth in the stock market, but as you can see, the stock market is priced for perfection, primed for correction. There's a lot of wealth in there, and with how expensive the stock market is today, I cannot imagine, it consumes and absorbs like a sponge a lot more wealth. It's probably already completely saturated. So you're going to see a lot of wealth flow out of that and into other capital markets. Wealth flows around, liquidity flows around, and you're going to end up seeing, wealth get transferred into other things. So it's clearly, we're as extended as we can be in the stock market, and then the bond market is essentially following a similar pattern with how low interest rates are and how long they've been this low. You're essentially seeing, the same thing, pretty much bonds are as expensive as they're ever going to get, and they can't get more expensive, which means the upside is obviously, capped in both the stock market and the bond market. And as things start to come out of there, it can't just go into nothing. So is it going to go into dollars and currency? Well, obviously, with the amount of currency being created globally, and what I'm going to talk about in a little bit, inflation, no, people are not going to have it just move into holding dollars. So, because as we saw before, currencies are not a store of value. So where does that mean? Once it comes out of the stock market, bond market, and whatnot, it's going to go into gold. It's going to go into Bitcoin. It's going to go into things, and you are going to see money and wealth flow into these things to provide stores of value and actually create wealth depending on how early you do it. And I'll get to that in a moment. But that's the problem. That is, the problem for the price of Bitcoin right now. But I don't know for sure, but believe that we're going to see it, change. We will see buyers. When? I don't know exactly when. Will we? I am very confident we will eventually. And it's probably going to be sooner than later. But what I'm trying to do here in terms of, what gives, now we're going to analyze Bitcoin and try and come up with an idea of what its potential is and where it could go. The ceiling is massive. I mean, you're talking about over $300 trillion worth of wealth across, 3 capital markets, stocks, bonds, and currency. And you just have to realize, that's potential. That's the ceiling is somewhere, it's a fraction of that. And even if it's just the sixth of, once we get to our saturation point and the cryptocurrency market and Bitcoin just becomes a sixth of this. I think it will be bigger, but if it just becomes a sixth of this, that is a lot of upside. So, you need to keep this all in mind. The ceiling is high. And we actually know the problem, not enough buyers. So here's another thing when it comes to adoption, and this is probably, this is where I'm going to talk about the first quarter, and the only other thing that people, use to poo-poo, the only other point people use to poo-poo Bitcoin is going to be on the adoption curve. Now, when you compare it to the currency market, Bitcoin is less than 1%. So less than 1% of the currency has, ended up, the value of that has gone into Bitcoin. So we're extremely early on. If you think like gold, it could be a reserve currency one day. If you look at it in terms of wealth globally, Bitcoin is actually at about 0.5%. And how I figure that out is I take the total number of Bitcoin addresses and I multiply it, which is 38 million, with a non-zero balance. It's not the total number, but it's the total number of Bitcoin addresses with a non-zero balance, which is 38,471,412 last time I checked. And then you multiply that by the average amount of wealth an individual in this world has, which is around $77,000. You end up getting to 0.5% of wealth potential there. Now, when we look at it relative to currency, it's at 0.8, but that's just currency. And if you include some other things, then, we get into the similar type of ballpark. So what you're, essentially seeing is, okay, well, in both instances, we're less than 1% in terms of, wealth and a number of ways we can measure it. So Bitcoin hasn't even tapped the wealth of 99% of the wealth potential via individuals from all indications. And then when you take the 38 million and compare it to, the global population, that's about 0.5%. So we're, because you assume and there's probably people who own multiple addresses, but let's assume that each one of the 38 million 471,000, whatever, Bitcoin addresses are all to one individual. I actually know I have two or more. Actually, I have more than that. I don't even know. But with it being said, because the reason for that is because you don't keep them all in one place. That example being what happened in Turkey. So anyway, putting that aside, when you compare that though, let's just say that, and I know that's not true, but let's just say the 38 million are each associated with one person each. You're talking about 0.5% of people in the world. Less than 0.5% of people in the world have adopted Bitcoin so far. So we are not even anywhere down this line in terms of adoption. And this adoption curve, essentially, there's two things. In terms of market share, and then in terms of, the bell curve, they work out. But what this tells me, since we are not even at 2.5% most likely, and I mean, let's say, okay, we're not going to take the whole entire market, stock market, bond market, and currency market, and take all of that, so let's multiply these two things by 3. We're maybe around a percentage point, maybe as high as 2.5 or 3%, maybe in that area. It's still extremely early on in this. We are extremely early on in the cryptocurrency market. We are extremely early on in the Bitcoin. Let's say it'll only get 1/6 of this slice. So we take that into consideration. And then, you take in the cryptocurrency market totally. No, we are not even, we are certainly, I'll say this, when you take, the whole entire cryptocurrency market, and let's say that, the cryptocurrency market doesn't even, it just gets to eventually at some point in the future being 1/6 the value of the stock, bond, and currency market. That, even taking that into consideration, we're not at the early adopters. We're somewhere between innovators and early adopters. But when you think about all the things that cryptocurrencies could do as compared to stocks, and they're better than stocks, and there's a bond aspect to these things, in which case there was a cryptocurrency bond issued, and then that the fact that they can be currency, they can take that form, the entire cryptocurrency market, and then Bitcoin's role in there, we may not even be past the 2.5% for innovators. And what that essentially means is, on a compounded annual growth rate perspective, Bitcoin's average of 200% is probably not even the peak. So we haven't seen anything yet when you look at it by these indications. So once again, the ceiling is high. We're really early on. The ceiling is really high. And now we're going to delve into something that talks about inflation. So what takes us from how low we are and early on we are, and keeps us going to the point where you have that widespread adoption, and we start to see us get to the ceiling. Well, it's modern monetary theory and all its flaws. I'm just going to read the top paragraph, but let's see here. And this actually acknowledges it, but Insider, let's see. So MMT, which is the abbreviation, is a big departure from conventional economic theory. It proposes governments that control their own currency can spend freely, as they can always create more to pay off debts in their own currency. And this has existed since the Federal Reserve and Central Bank was created. Say what you will about Andrew Jackson. There is a reason why he hated central banks and why he abolished it so early on in our history. With that being said, here's the too good to be true lofty promise. Now, back when the Federal Reserve was initially created, it was supposed to just create financial stability, and that was it. Now, we use the Federal Reserve to try and solve all of society's problems, in addition to now racial injustice. So, I'm not going to comment any further on that. I just literally, at the end of the day, I don't even think it's sustainable for financial stability. It actually creates instability. So its ability to solve any other problems than the original one is even the original one in the long term, and it's not sustainable. I don't know why I would think it would solve anything else, but the theory suggests, which is our central banking, Keynesian economics, all of this is pretty much together. Marxism, socialism, all of this is together. The theory suggests government spending can grow the economy to its full capacity, enrich the private sector, and eliminate unemployment, and finance major programs such as universal healthcare, free college tuition, and green energy. So it can do everything. What can it do? Well, you know, there's a lot it can't do. And in theory, I'm about to destroy it, but let's just finish these two other paragraphs. If the spending generates a government deficit, this isn't a problem either. Screw deficits. Rack up as much debt as you want. What could go wrong with that? The government's deficit is by definition the private sector's surplus. So it's actually a surplus. Wow, a way to flip things on their heads. This is beyond unreasonable and insane. Oh my God. Increased government spending will not generate inflation as long as there is unused economic capacity or unemployed labor, MMT proposes. Fantastic. That is the problem. Right there. They admit it. They admit it. They concede it. And I'm about to tell you why it's a problem. And I'll show you a real life example that is a massive problem. It is only when an economy hits physical or natural constraints. Oh my gosh, I didn't even read this, but essentially they're admitting the flaws of it. Oh my gosh. Well, let me tell you this. It always hits its physical and natural constraints. It never, ever doesn't hit those on its productivity, such as full employment, which is not. Productivity and no, full employment, no. There's not a strong relationship there as it's, proposing and, telling us right now. But anyway, that inflation happens because this is when supply fails to meet demand, jacking up prices. Well, yes. The major direct cause of inflation is an issue with productivity, and it's because supply cannot meet demand, which is a productivity issue, and it always ends up happening. That's why all fiat currencies fail, because we've done this before, and it's happening again, and history is repeating itself, and nobody seems to care enough to do anything about it. And the sooner we do something about it, the less painful it will be at the end of the day, because we'll be able to manage the issues and pain. But let's take a look at what a free market is. The free market is an economic system based on supply and demand with little or no government control. So essentially a market which communicates a bunch of different things, whether it's price, quality, need, so on and so forth. The price communicates a bunch of these different things, and then it creates a bunch of different incentives and other things and so on and so forth to incentivize more supply if it's needed, to tamp down demand if it's too excessive, to take care of a bunch of different things and pretty much create equilibrium and balance. And the price is the perfect balancer. Like you see those people who have plates on little poles, and they twirl them around, and they're doing all these things, and they have one on their foot and on their nose and on their hands and whatnot and on their fingers. Literally that's what price does. It does something that's impossible. In modern monetary theory, what you're going to have to realize with that, and socialism and all these things, is you're going to think that people can control that. Literally, no, they cannot balance these things, and they're going to fail at it, and that's why you always end up having issues. And this is why socialism always creates shortages, and it's happening to America. We're going to see it. It's going to be terrible. But this is the reason, why we're going to have inflation, and why, we're going to go from this very low early on level, and we're going to end up, reaching that ceiling potential. But essentially, I could read the rest of this, but whatever. Sorry for my catchphrases. So here are my thoughts on MMT, modern monetary theory. You need to remember this about inflation. Money supply expansion does not directly create inflation. Watch out for those who claim Bitcoin is not a hedge against inflation. Anything that maintains or increases purchasing power is a hedge against inflation. Bitcoin is amazing at that. So Nazem, who recently called Bitcoin a Ponzi scheme and said, it's, there's no relationship between it and inflation. No, it's just freaking not just annihilating inflation, but everything else in its pathway. And he has said a couple other things about Bitcoin and its issues, but essentially his major issue, even though he couldn't articulate it properly, is the fact that we don't have mass adoption, because right now the only thing that does give Bitcoin value is somebody buying it and holding on to it and then selling it to somebody later at a greater price, which is technically a Ponzi scheme. But if you end up getting mass adoption, well, that's technically not a Ponzi scheme. But I get the framework and the structure, similarities. But when you get adoption of it and it used on a consistent basis with consistent demand and all these other things, and it's serving as a unit of exchange purpose, which it certainly fully can. Remember, he says it's not a currency, and he's mistaking it because it's money. It definitely isn't a currency. I mean, he's right, but he's saying it doesn't fulfill these, different attributes of money or whatever. Exchange, what you use for exchange, whether it's currency or money. But Bitcoin does fulfill all of these. So he's wrong in that, and he's wrong in calling it a Ponzi scheme. Because we will eventually, whether we like it or not, get mass adoption. With that being said, let's go back to this. So he's wrong. And anybody that calls Bitcoin a Ponzi scheme is wrong. So what creates problematic inflation is a lack of production. Increasing the money supply will create demand, but if you can produce enough supply, you will not see inflation. This does not mean, however, you will never see inflation. I explain further below. Therefore, socialism always fails. The longer you wait until the breaking point, the more painful it will be to return to a sustainable system. In a free market, you must improve something, increase productivity, meaning we use less of something, so conservation and conserving, to earn the right to more income. So to earn the right via more income is what I wrote here, but you earn the right through increasing productivity to earning more income to then be able to consume more. So you see the equilibrium? We must use less to be able to consume more, which means we are then able to maintain equilibrium, which is essential to being sustainable and preventing inflation. And at the cornerstone of this is price. In an MMT market, it is okay to print money. So no need to increase productivity, no incentive, no requirement, no nothing. Will productivity still try to be increased? Yeah, because it makes sense. Who wouldn't want to become more productive or efficient or whatever? But once you take a requirement to do something away, it ends up being done less, and it becomes less significant and important over time until, it's nothing. Anyway, getting back to this, so an MMT market, it is okay to print money, so no need to increase productivity, which then allows us to consume more. See the imbalance? MMT reduces productivity while increasing demand, which is clearly broken and will eventually create inflation. It is just a matter of when, not if. Ironically, those who believe in MMT, let's go back to here, it suggests that it can end unemployment, finance major projects, it says universal health care, so it's finally grandma doesn't have to suffer, or a bunch of other people don't have to suffer, free college tuition, so everybody's going to get a textbook and learn and get smart thinking things, and we're going to save the planet with green energy. Ironically, those things get associated with one another, and it's insane because ironically, those who believe in MMT, modern monetary theory, which is clearly not sustainable, as I previously mentioned, because of what it does to productivity, although nobody seems to care, except for the fact that these people admit that it's a problem. In the bottom, they just don't acknowledge the fact that there's a relationship between MMT and reducing productivity. They just say if. Well, like I said, once you take the requirement away, because in free markets, it's a choice. You don't have to improve something, but then you won't get that right to more income. With modern monetary theory, it's an if. Or, if you want to. You don't have to. And obviously, the difference between those two things, when you compare them, yes, no. With modern monetary theory and with socialism, with all of these things, no, you will have less productivity. It's not a maybe, it is a given. So ironically, those who believe in MMT, which is clearly not sustainable, and the actual reason our planet is being destroyed, also believe in creating a sustainable future. And the reason why it's destroying our planet, MMT, is because of the fact we're consuming and living beyond our means and consuming more than we put back. And they believe it's creating and helping them create a sustainable future, and they believe in science and clean energy, et cetera, et cetera, et cetera. Yet in biology and chemistry and physics, which are science, something that these people will always tout to you when you talk to somebody who, believes in this, whether or not you start with MMT or not, they believe in government, they believe in all these things, and they say they believe in science. Usually these things are grouped together, and I get to a political party in a moment. But the thing is, if in biology and chemistry and physics and et cetera, et cetera, et cetera, equilibrium is critical and something the universe is clearly constantly moving towards, whether you like it or not. Now here we go with the political part of it, but yet progressives and liberals like AOC, Alexandria, yes, I'm talking about you, are the humble and nice, smart people that are sane, nice, smart people who will save us from our problems, which is literally what this says. I'm not saying go vote Republican, but fundamentally there is no reason to vote for AOC or a Democrat after you realize this massive contradiction in their beliefs, which is they believe in something which is not sustainable as a source to our problems and making our world more sustainable. Not to mention this massive contradiction is the root of all and most of our problems. It is. It is. This is 5 years ago.
50s, 60s, 70s, irrigation was developed in western Kansas, and that's when the high use of the aquifer began.
Most farmers were drilling wells at this.
It's really doing me. Gosh darn it. One moment here. The problem is, unless you okay, done. I think this will solve the issue. But for whatever reason, I can only play this once, and I tested it, and then once I play it again, the lips don't sync up with the audio, and it's just going to drive me insane.
50s, 60s, 70s, and 80s, irrigation was developed in western Kansas, and that's when the high use of the aquifer began.
Most farmers were drilling wells at this time and pumping to irrigate.
We've been pumping out of that for livelihoods to sustain ourselves and our livestock.
Now with the deep turbine pumps and the pressurized center pivot system, you could irrigate just about anywhere, any type of soil, and we did.
I would say we don't have an original well functioning anymore. They've all been re-drilled.
Irrigation is a good thing. Over the last 3 or 4 generations, we've just overdone a good thing.
As we pump water on our crops for irrigation, we're constantly drawing from that like a straw. So basically the water situation that we're in currently is we've been drawing from this aquifer, this source of water, for several decades now, and now we're down to the very bottom.
We're getting down to the bottom of that huge pool of water that in the 50s and 60s we thought was inexhaustible.
In some locations, the groundwater has basically disappeared.
If you're looking at your car gas tank and your gauge, we're clear down to the E.
When Grandpa was drilling wells, you find big gravel or rocks like this, you were going to find a really good well, and now it just now the only water it finds is a couple 3 feet at the very bottom of the well that the pumps can't effectively access anymore.
So yeah, golly, what a surprise. Now, that was 5 years ago. Clearly, our society managers, our government, this is a big problem. They would have taken care of it. Oh, you gotta be kidding me. Farmers are depleting the Alagala aquifer because the government pays them to do it. Come on. Come on, people. Seriously? Seriously. That's nature. This is nature here. Nature. Nature. Natural limits, what they say. It's not just me. I didn't even read this entire thing. I didn't realize that they would admit the problem that could actually happen and the flaw with modern monetary theory, and it's actually already happening. This is something new. MMT is something more recent and new, and it's already happening before it even gets off the ground, which is how laughably bad and such a failure the idea is. Because whether they want to admit it or not, modern monetary theory, they're saying modern, but it's Keynesian economics. It's something that has been, Marxism, socialism. It is something that has existed for a very long time. It's just these idiots, for whatever reason, don't know how to look in a history book or don't care to or want to, the people who are pushing MMT, and they just look, refuse. Or they're in denial, or they just think, it's different this time. How many times have we heard that? There are certain things that are different. Every time is slightly different. History doesn't repeat, it rhymes. And you gotta, understand that. Some people don't. So, okay, well, let's try and gauge the magnitude of the situation and the problem. How important is the Alagala aquifer? Well, the aquifer whose total water source, okay, the Alagala aquifer, whose total water storage is about equal to that of Lake Huron in the Midwest, is the single most important source of water in the High Plains region, providing nearly all the water for residential, industrial, and agricultural use. Wow. Wow, and that spans across Texas, New Mexico, Colorado, Wyoming, South Dakota, Nebraska, Kansas, and Oklahoma. Ay, ay, ay. The creation. Well, it's not in the order I would like, but anyway. How old is the Alagala aquifer? Well, it was started to be created about 24 million years ago, and then it just got finished up about 2 to 6 million years ago. So it was about, anywhere between 16 on average to 20 million years in the making. And scientists say it will take natural processes 6,000 years to refill the reservoir, the aquifer. And as you saw in that video, the guy said 50 years ago we thought this thing was just, we'd never reach the bottom. So what took millions of years to create will take 6,000 years to replenish. We sucked dry in about 50. And you want to know what? You want to know something? Before the Federal Reserve, we weren't having any problems. We weren't on this kind of trajectory. We weren't on this path. Before modern monetary theory, we weren't starting to do these things. We weren't starting to have these problems or issues. Okay, well, they say that, we'll be 70% depleted in 50 years. You know what? I think we're going to be depleted even faster. But you don't even have to get to zero for it to be a problem. You just have to be going on this terrible trend, and it is already 5 years ago it was impacting farmers. So the impact is already starting to get felt. And as you go lower, as you suck out more, as you deplete it more, the problem will just get worse. And we will feel the problem worse. So where are we feeling the problem? Well, it's already showing up in food products and sources. On a 10-year chart, soybean oil futures, you see with the, what it's done over 10 years, not surprising it's, gone up over 10 years. But it all happened mostly in the last, year or so, a lot of this, I mean, we are at a peak that was previously seen and met, but what you can see is the amount of currency that was created, the amount of dollars that were created, and there is a drought. We may have the first water shortage, federal issued water shortage emergency in history in the West, affecting multiple states. Anyway, with that being said, this is not just because of currency creation, but because of a shortage. See also this at 10-year high. And the terrible thing is these things are coming together at the same point in time. And that's because of the insane idea these people think, which is deficits don't matter. You shouldn't worry about inflation. And, this can eliminate unemployment, finance major projects such as universal health care, future free college tuition, and green energy. So they think it can solve everything. So we're just going to print money to solve all these problems. So you're getting expansion of the money supply at the same time you're creating shortages, which is why, ultimately at the end of the day, all of these types of and attempts at socialism and all these other things end up failing. Unless humans can somehow strip themselves of the requirement to make things more productive before they consume, they won't be able to make these things work. However, if you're going to, do it yourself, then you don't even, why change at all? If you're going to do it either way, you might as well just have the requirement as insurance to make sure that nobody ever changes. But if we're already going to do it, let's build into the system, that, because it shouldn't impact us if we're already going to be productive. It should just happen, but as insurance. But when we take it away, we take that risk, and obviously it's very, very bad because the risk always comes to bite us. But you're seeing the shortages here. You're seeing the issues occur. You're seeing them happen. You're seeing the problems. Now, lumber isn't directly impacted by the Ogallala Aquifer, but as you can see, we have an increase in creation of demand because of these, crazy things going on with our monetary system and economic policy that is just sending prices through the roof. And we go back to here. The Fed's inflation blind spot already surging grocery and housing prices. Two most critical things to living. You need a place to stay, you need some food to eat, and then there are other things that are important after that, like health insurance and whatnot. But, you can survive a year without health insurance. You can't survive a year without food, and you probably can't survive a year without a home or shelter. So, what does this all mean and how does this all come together? Well, you gotta make a decision. You gotta make a decision for yourself. There are risks that people will claim, but aren't as big as you may think, like that, like the crime of Bitcoin and, the dirtiness of Bitcoin. And then, the fact that this is a legitimate one, you could either have it stolen or lost. And then you have to gauge the risks of those and then the solutions that can happen, which, let me remind you, Coinbase is a solution to you losing your cryptocurrency or having it stolen. Coinbase and Venmo and more companies coming out there. We already have a solution on how it actually could be good and just not even just a solution, but additive and more helpful to getting clean energy. So you got to see, the pros and cons and, good and bad of, and dirtiness of Bitcoin and its impact on our environment and how big of a risk that is and whatnot. And then you have to look at the other risks. Yes, this is a risk. Modern monetary theory is a risk. You have to look at the other risks. What are the solutions to these? Well, when you go with what we have right now and our in prominence in society and around the world, the solution is just when we have a problem, we'll print more money. And you could just, nonstop. Literally, we're going to have a utopia. We're in the final stages of this. So you got to look at the risks of that and see what's happening. And see, are there solutions to it? Well, the solution is more of the same. And, as I explained here in the bottom, the solution's more of the same, but then it, has this destructive part of modern monetary theory, has a destructive part to a critical component for something that's sustainable. And, this really hits home then. So you got to look at the, risks and solutions to the risks for Bitcoin and whatnot. And then you got to look at the risks and the solutions to the risks for everything else. And you got to realize that, MMT is trying to solve issues with sustainability with something that's not sustainable. That doesn't make any sense in my opinion, but you do your own due diligence. That's a solution to these risks that I'm highlighting with inflation and everything else, and productivity and production. And it all falls back to this. The incredible thing, even the biggest risk for Bitcoin and whatnot, which is $2 billion was stolen from an exchange, and another exchange is having a problem, although it looks like the authorities in Turkey got that exchange, hopefully, I think, before anything terrible could happen. In which case, hopefully people recoup some losses. But it goes back to this. Now, yes, with Bitcoin and whatnot, the $2 billion that was lost in Turkey is something that you got to be on the lookout for. We have solutions to that problem, but there is even a bigger solution than Venmo and Coinbase, which is you have the ability to hold it yourself and have protection. And blockchain is trustless. Because even if a miner or people who mine it wanted to try and manipulate or be malicious, there's so many other miners that it's impossible to take enough control for enough time to actually be able to steal from you if you use a hardware wallet. If you use a hard wallet and you use it properly. If you use a hardware wallet improperly, then you have an issue. If you use some kind of, Coinbase or whatever, they could be hacked or they could themselves hurt, take it. I don't think that's going to happen in either of those two cases, but those are risks. But at least if you use it properly, a hardware wallet will entirely protect you from anything being stolen. So you have that option. And when it's in your hand and you have it and you use it properly, you know it's yours. You know it's there. You know nothing can happen to it. Bad can happen to it. With currency, the incredible thing about it is you could be holding it in your hand and it's still being stolen from you. Moment after moment after moment. Your wealth is being stolen from you even if you hold it. And if you hold Bitcoin and if you hold it properly, nobody can take it. But the freaking incredible thing about currency and that money is that lack of stored value and the fact that you could even be holding it and it's like magic, bad magic, very bad, but it's like the most incredible thing. You can have it in your hand and it can still be stolen from you. And that's why you have seen the insane move into Bitcoin. And we're just getting started, in my opinion. But those are the risks and the things you need to consider. Don't take this as financial advice, but in my opinion, because I'm not a financial advisor, you should do your own due diligence, like I've said many times. Weigh the pros, weigh the cons, evaluate the risks, see what the solutions are. Do your own due diligence, and before investing any money, consult a financial professional. That is my advice. Once again, I'm not a licensed financial professional, even though I know a lot. But when you look at all of this and we see the recent sell-off in Bitcoin, that is an opportunity, and I'm buying it myself. And, That's how you should look at this. We are not at the end of the bull market. We have a long ways to go. Even talking out of the side of their face, two sides of their faces, Citibank does. They also think so. Thank you very much for tuning in. I know this was very long, but I covered quite a bit. And you know, for a trader, maybe they don't find this useful, but for anybody who wants to learn about Bitcoin, this, you know, hopefully was very helpful. Once again, though, thank you, everybody. Have a wonderful rest of your day.